Is Forex trading as good as people on Instagram make it seem? When asked if Forex trading is as good as people on Instagram make it seem, the short answer is that it's much more complicated than what is often portrayed. Forex trading, or foreign exchange trading, is the process of buying and selling currencies in the hope of profiting from changes in their exchange rates. It's the largest financial market in the world, with over $6 trillion in daily trading volume. Unlike the stock market, Forex operates 24 hours a day, 5 days a week, giving traders around-the-clock opportunities to buy and sell currency pairs. In theory, this constant availability combined with the high liquidity of the market makes it seem like an excellent way to make money. But is it really that simple? On Instagram, Forex trading is often glamorized by influencers who present it as an easy and effortless way to get rich. They share pictures of luxurious lifestyles, fancy cars, exotic vacations, designer clothes, and claim that Forex trading funds it all. To someone scrolling through their feed, it might look like anyone can achieve financial freedom quickly and easily through trading. However, this image is misleading. The truth is that Forex trading, while potentially profitable, is also incredibly challenging and risky. It requires in-depth knowledge, rigorous analysis, emotional discipline, and the ability to manage risk effectively. The first thing you need to understand about Forex trading is the complexity of the market. Success in Forex isn't just about guessing which currency will go up or down. It involves both technical analysis and fundamental analysis. Technical analysis requires a trader to study price charts and use indicators like moving averages, RSI, relative strength index, and Bollinger Bands to predict future price movements. Fundamental analysis, on the other hand, requires you to evaluate economic factors like interest rates, inflation, employment data, and geopolitical events, all of which influence currency values. For example, let's say there are signs that the U.S. Federal Reserve is likely to raise interest rates. This could lead to a stronger U.S. dollar because higher interest rates make the currency more attractive to investors. A knowledgeable trader might decide to buy USD, JPY, US dollar versus Japanese yen, in anticipation of the dollar's rise against the yen. But it's not as simple as just buying when the news comes out. Markets are often forward-looking, meaning that currency prices may have already adjusted based on the expectation of an interest rate hike. Traders who succeed in Forex have to learn how to anticipate market movements and position themselves before the news is fully priced in. When it comes to risk management, there's no avoiding the fact that trading is risky, far riskier than many Instagram influencers would have you believe. Professional traders don't just focus on making profits. They spend just as much time trying to limit their losses. This is where risk management tools like stop-loss orders come into play. A stop-loss order automatically closes a position when the price reaches a certain level, ensuring that a trader doesn't lose more than they can afford. Another critical aspect of risk management is position sizing. Professional traders never risk too much of their capital on any one trade, with a common rule being to risk no more than 1–2% of their total account balance on a single trade. For instance, if you have $10,000 in your trading account, you would only risk $200 on a trade. This way, even if you face a series of losing trades, you still have enough capital to recover. Unfortunately, many beginner traders, especially those who are influenced by social media, dive into Forex trading with unrealistic expectations and take on excessive risk, often using high levels of leverage. Leverage allows traders to control a large position with a relatively small amount of capital, amplifying both profits and losses. Imagine controlling a $50,000 position with just $1,000 in your trading account using 50-to-1 leverage. A 1% price movement in your favor could yield a $500 profit. But a 1% movement against you could result in a $500 loss, wiping out half of your account. This is where the flashy Instagram posts fail to provide context. The reality is that leverage is a double-edged sword. It can lead to significant gains, but it can also wipe out your entire account if you're not careful. Traders who misuse leverage, especially beginners, often find themselves facing substantial losses very quickly. The potential for large profits makes leverage tempting, but without proper risk management, it can be disastrous. Instagram posts showing big wins don't often show the losses that led up to them, or the fact that most traders lose money, especially in the beginning. Another aspect that influencers rarely talk about is the emotional control required in Forex trading. Successful traders have to remain calm and rational, even in highly volatile markets. Emotional trading, driven by fear or greed, often leads to poor decision-making. For example, a trader might see a sharp drop in the EUR/USD pair and panic, selling off their position prematurely out of fear of further losses. However, if they had stuck to their analysis and trading plan, they might have seen the price rebound, resulting in a missed opportunity. Learning how to manage your emotions and stick to a trading plan is crucial for long-term success. Forex trading is not just about making money, it's about risking money. And this brings us to another common misconception that's perpetuated by Instagram: the idea that you don't need much capital to start trading. While it's true that you can open an account with a small deposit, trading with minimal capital increases your chances of over-leveraging, which can quickly lead to significant losses. For example, if you start with $100 in your account and use 50-to-1 leverage to control a $5,000 position, even a small market movement against you could wipe out your entire balance. Some traders are lured into Forex by promises of guaranteed success using Forex signals. These are buy or sell recommendations provided by third-party services. While some legitimate services exist, many signal providers have poor track records or are outright scams. Blindly following signals without understanding the reasoning behind them is a dangerous strategy. Even a good signal can fail, and without understanding the market dynamics behind it, you won't know why it didn't work, making it harder to learn from the experience. Then there's the darker side of Forex trading, the scams. In addition to the unrealistic portrayals of Forex on Instagram, there are also fraudulent schemes designed to take advantage of inexperienced traders. Some influencers or so-called trading gurus promote these schemes, making grand promises of fast profits. Common scams include Ponzi schemes, fake brokers, and fraudulent signal services. For instance, a trader might be lured into a Ponzi scheme, where returns are paid to earlier investors using the capital of newer investors. These schemes eventually collapse, leaving most participants with nothing. It's crucial to research any broker or service you work with and ensure they are properly regulated before entrusting them with your money. So, can you really make money with Forex trading? The answer is yes, but it's far from easy. Profitable trading requires years of learning and practice, and even the best traders experience losses. In fact, statistics show that a majority of retail traders lose money. Those who do succeed have developed the skills, discipline, and risk management techniques necessary to navigate the market. A good trader is more focused on limiting losses than chasing big profits. They understand that trading is a marathon, not a sprint. It's also vital to have realistic expectations. Forex trading is not a get-rich-quick scheme, and anyone approaching it with that mindset is setting themselves up for disappointment. While Instagram may make it seem like traders are making easy money, the reality is that the vast majority of new traders lose money, often because they don't have a solid understanding of the market or a well-defined trading plan. Even experienced traders suffer losses, but what sets them apart is their ability to manage risk and remain disciplined over the long term. With the right approach, Forex trading can be profitable, but it's not the effortless path to wealth that social media might suggest. In conclusion, is Forex trading as good as people on Instagram make it seem? It depends on your perspective. If you approach Forex trading with a well-developed strategy, the right skills, and the discipline to manage risk, then it can be a profitable venture. But if you go into it expecting easy money based on what you've seen on social media, you're likely in for a rude awakening. The reality is that Forex trading is a challenging and often risky business that requires a great deal of effort, patience, and emotional control. While it's possible to achieve success, it takes time and a solid plan, not the glamour and quick wins portrayed on Instagram. Thank you for watching.